Earlier this week, I caught up with Miss Lynette Towns, who is a representative from Naari Housing Counseling Agency. Now, this agency is located in Tucker, Georgia, and guess what, y'all? They're going to be coming out to the festival. And what they do is something that is so crucial for our community. They help homeowners save their homes. Hey, Lynette.
Hey, how are you today?
I'm doing good, and thank you so much for joining us. And we had a brief conversation about what you do, and I'm not familiar with all of this stuff with loan modifications, and I really thought that our listeners would really benefit from what you guys do. And from what you told me previously, you're really kind of making it very clear and also helping the consumer to get what the banks need to be doing for them. Am I right?
Yes. That's exactly what we're doing. Naari Housing Counseling Agency has been in business for 10 years, and we can do business in all 50 states. We're a nonprofit organization that assists homeowners that have had a hardship and keep them in their homes through loan modifications. There are several types of loan modifications available to homeowners in order to stay in their home if they've had a hardship. A hardship is a loss of job, income, illness, divorce, and even an adjustable rate mortgage is a hardship. Even if you have an adjustable rate mortgage, a lot of the adjustable rate loans were not proper, that qualifies you to get a loan modification just to convert it to a fixed payment.
Yeah, because, we went through that period of predatory lending, right?
Yeah.
And we're coming out of that. What's different about your company?
Well, there are lots of companies out here. We personalize the service in that you can come to our office and speak to individual counselors. Through the Obama administration, there are guidelines say that the banks should help homeowners keep their homes because we bail them out, and there are laws and regulations that apply to homeowners being able to keep their homes. And the problem is homeowners can't wade through the myriad of paperwork. The banks usually say one document is missing or another document. We are an advocate for the homeowner, and we are that third eye or that witness on behalf of the homeowner. We help them to get through the system to get approved to a final loan modification.
So basically, you kind of cut the red tape for them.
We still have the red tape, but we just document ours a lot better. We know of all the documents that are missing, whereas a homeowner might send too many documents or not enough documents, and we wade through it for them to say, this is how you get approved.
Okay. Are the banks cooperating?
The banks are cooperating, but I'll give you a for instance. If I give you a $2 difference in your payment, I've given you a loan modification, but it's not the best modification for you. So employees of the bank are trying to keep all of the profits for the bank. We're going by the Obama administration programs that are in place to say these are the guidelines and this is how it should be.
Okay. So I hear people talk about going in and try, they have all these seminars where people are coming in to try to go get their homes refinanced or modified. And a lot of them say when they come out of the plan, they're really not saving that much money. What's going on with that?
Well, what happens is the banks are legally sometimes doing the loan modifications, but they're not doing it in the best interest of the homeowner.
Okay.
For instance, if I just lower your payment by $20 because you're so stressed out in trying to keep the home, you'll agree to take it when it's really not the best program available for you. So we go through the numbers, we go through your current financial situation, and then we pretty much give you a range based on what's called a 31% ratio of what that new payment will be.
Give us an example of what that 31% ratio means to people.
Well, a person is making $4,000 a month when they bought the house.
Girl, you got to go a little lower than that. I'm just playing with you. Look, folks down here, we don't average $4,000 a month. So break it down just a little more.
Okay, so a person is making $2,500 a month or $30,000 a year. And then all of a sudden, the husband's income stops and only the wife is working. So the wife's income is reduced to $1,500 per month, and she's the only provider of the house.
Okay.
We can reduce that payment to about $465, which would be a fixed rate, and it would include taxes and insurance.
Do you do it by income, or do you do it strictly with the value of the house?
No, this is the great thing about loan modification. Let's say you're in I know it's a high number, but let's say you're in a $300,000 or $400,000 house, but your income has dropped substantially. We have to base the loan modification on the current income. So maybe you had a $3,000 mortgage payment. There's a possibility that we can reduce that payment to as low as $600 a month.
So that's great. So they're really not basing it on the property. So it's really based on the actual income.
Right. It's based on the current income, and interest rates can go as low as 2%.
2%?
Yes.
Oh, girl, you got to come to LaGrange. I'm telling you, because like I said, I've heard so many people that have had really bad experiences, and not just in LaGrange, but my friends in Atlanta as well, because they're not getting the rates that they thought that they would get by this modification when they're going through the banks. So your service, really will help people.
Well, what the banks do is, because the homeowner wants to keep their home, they're attached to it, they've raised their family in it, or they've been living there some years, and they've had hard work into keeping the home, then something happens like this tough economy, and they still want to keep their home, but the banks generally just say, okay, you are paying $1,000 a month, we want to help you keep your home. All those back payments, we're going to now make your payment $1,700 a month. And you're so nervous, you want to keep the home, you go, okay, I'll agree to that. It's not in the best interest. If you couldn't pay the $1,000, you sure can't pay the $1,700, so you make that first payment, and then you go right back into default.
Wow.
And so what we do is do the loan modification for a brand new loan, and rates can go as low as 2%. And there's a program or a tier system that works. It can be as low as 2%. If part of the principal of the mortgage has to be reduced, that can be part of the numbers, or the amortization can even be stretched out. So it's a combination of 3 different ways to get you to that 31% Obama plan program.
And 31% is the total that people need to be striving for, but they're not aware of it. Is that correct?
Right.
Okay.
Right.
All right, listen, we're not going to give all the goodies away.
Okay.
We want them to come out to Bringing the Ages Together September 17th at Mackie Wilson Jennings Funeral Home. Make sure you come out and meet Miss Lynette Towns with Naari Housing Counseling Agency. She's coming all the way from Tucker, Georgia, just to give you this information. Thank you so much, Lynette. You want to give your phone number out?
Yes, I do. I want to give the phone number. The number is 770-322-6007, and you can ask for Lynette or Lenny. We're twins, and you can ask for me or my brother, Lynette or Lenny, at Naari Housing Counseling, 770-322-6007. Ask for one of the twins. Would you like our website too?
Why not?
Our website is www.naari.com.
Give it one more time, sweetie.
www.naarihca.com. Thank you so much, Ms. Wanda Jennings.
You're welcome, girl. We'll be looking forward to meeting you at Bringing the Ages Together September 17th. Mackie Wilson Jennings Funeral Home is bringing information to the community that you can use. Take care, sweetie.
All righty. Thank you so much for having us. Bye-bye.